Welcome to another edition of Tax Tip of the Day, brought to you by Patriot Tax Professionals. Patriot Tax Professionals specializes in tax resolution for individuals and small businesses, including offering compromises, stopping wage garnishments, bank levy releases, and more. Joey and Deborah owe money to the IRS and want to know if they are eligible for an offering compromise. They've heard all the commercials and some salesperson is telling them everything they want to hear. Here's how Joey and Deborah should evaluate everything before they commit to paying anyone. First, it's important to understand that the IRS is going to look at your ability to repay the debt before they agree to grant you an offer in compromise. Part 1 of your ability to repay is the asset test. The IRS will want to know about all your assets that you own, such as the equity in your home, 80% of the value of your home minus any outstanding mortgages, the value of your automobiles minus the loan amount and a $3,450 exclusion, cash in all bank accounts minus $1,000 and 1 month of allowable expenses, the value of all your household goods minus a $6,250 exclusion, other assets such as stocks, retirement accounts, and cash value of life insurance. These assets also include exclusions as well. Part 2, the remaining income test. The IRS wants to know your gross monthly income from all sources. This may include your job, Social Security income, net rental income, disability income, and more. Next, expenses. The IRS allows for standardized expense allowances for food, clothing, and miscellaneous household items based on the number of people you claim on your tax return. Your housing and utilities allowance is capped based on the county you live in and the number of people you claim on your tax return. Your vehicle ownership costs are limited to $497 per automobile or your actual auto payment. Vehicle operating costs, such as auto insurance, are also allowed but capped. The IRS allows for your monthly health insurance expenses as well as out-of-pocket medical expenses. Additionally, the IRS will allow for court-ordered payments, dependent care expenses, such as after-school daycare, your current FICA withholdings, and if you're making a monthly payment to your state for delinquent tax payments. Other expenses such as credit card bills and unsecured signature loans are not IRS allowable expenses. The IRS will determine your monthly remaining income by subtracting your monthly IRS allowable expenses by your gross monthly income. Part 3, Collection Statute Expiration Date. The IRS has 10 years from the date of assessment to collect on the debt. How much time left does the IRS have to collect on this before the debt expires? Now that we have all the information collected, let's run it through this formula to determine how much the IRS will expect you to repay. Simply take your monthly remaining income and multiply it by the number of months remaining on the CSED date. Then add the liquidation value of all your assets to that number. This total is the amount the IRS will expect you to repay. Does this sound confusing? Let's go through a couple of examples. Back to Joey and Deborah. They owe the IRS $87,000. Their gross monthly income from all sources is $6,500. IRS allowable expenses are calculated at $6,150 per month, meaning the remaining income is $350. In our example, the IRS still has 54 months left to collect before the debt expires. The net liquidated asset value for Joey and Deborah is $12,000. So, the IRS will expect to collect $350 for 54 months plus $12,000, equaling $30,900. Let's take a look at example number 2. Rocky and Lisa Marie, self-employed. Amount owed $132,000. Gross monthly household income $4,900 and IRS allowable expenses of $4,700. Remaining monthly income equals $200. And the IRS has 90 months left before the debt is expired. Additionally, Rocky and Lisa Marie have a net asset value of $20,000. So, the IRS will expect to collect $200 per month for 90 months plus $20,000. Add it all up, and the IRS will expect to collect $38,000. And finally, example 3, Fred and Ethel, a retired couple. Amount owed $64,000. Gross monthly income $3,400. IRS allowable expenses $4,150. meaning remaining income equals 0. Months left until expiration, 65, and net asset value $10,000. Total amount to offer the IRS, $10,000. Well, I hope this helps. Do you have questions about an offer in compromise? Call the licensed tax experts at Patriot Tax Professionals, 877-782-9383. That's 877-782-9383.